Hi everybody, it's Chris here from Serene Education with the 4 majors and notice update for the 6th of September 2011. Hi guys, looking at the euro against US dollars to start with from our 4 majors, and then working our way right through to the Japanese yen. So daily on the euro, this is what it looks like. You can see the last week, a lot of negativity in this pair has been driven down after initially looking for a breakout to the upside. That failed to materialize, and what we saw was pretty much price being squeezed. You can see between these two parts here, a lot of indecision as we went through setbacks regarding the euro, and then trying to gain some momentum as we went through Jackson Hole, but ultimately price just failed to materialize and to break higher highs. In particular here at the 14,500 mark, price failed to rally. We got this this bearish signal here at evening star at a resistance level, or prior resistance. So that 3 candle setup over here, bullish, indecision, almost a shooting star or spinning top, followed by a bearish downward. Ideally you want to see a drive of equal length, so bullish followed by indecision, and then bearish again of equal drive would have been far better. But we had a significant resistance level there, price failed to rally, and then the bearishness gave it away. We would like to see price actually bounce on the next candle. That failed to materialize, because if you look at it from this angle here, there would have been potential for swing high, swing high, swing high. These swings over here, the support here, would have actually held it up, but that failed to materialize. It failed to find support at the intermediate trend, downtrend. I'll put it there in the line, and yeah, the next candle, very bearish indeed. That really sets it off, and we've been seeing price drop very significantly over the past week. So so much so that yesterday I went through the 1410, as I mentioned. If you start looking at bigger time frames, you'll see that, especially in the weekly, for example, you could use the weekly as a good indication. So if we just have a look at the weekly, you'll notice that 1410, 1400 in particular is a strong support and resistance level on a larger time frame. Notice you have parts of September, November, October of last year, and then through the latter parts, or the early parts of January, February, then May became support. So you can see here significant resistance and support in the past, and notice the institutional moving average as well as the 50-period moving average are below this. So 1400 psychologically is quite a strong level. We might see price actually falling lower, but we do need to see the weekly chart actually closing higher to give us any indication of possibly a consolidation in this area for potential upside movement. CTC on a weekly is still looking bullish, even though we have been consolidating for the large part of this year. But ideally we want to see price trading well above the 14,500 mark. Until it's doing that on a weekly, then we're possibly looking for further consolidation with an outlook of bearishness. Notice this previous high here is lower than the last one we saw in September, October of 2009. So we're seeing this this failing to rally higher. So this is a significant indication that we're going to be looking for further bullishness. However, if you look at the uptrend, you'll notice that price is at that crossroads. Could we see euro bounce? Because not only we have the 1400 psychologically as a long-term support and resistance level here, plus the institutional moving average at 1400, we also have the trend line, the major trend line on a weekly, also at that crossroads. So we could see price consolidate at this area here. Very well. So daily, look for that 1400 as a potential target. Okay, and then if price breaks through the 1400 and finds support, finds further resistance over here, then look for further downside movement. Okay, so looking at intraday, we're going to have to see, there's still likelihood for further setups for downside. You can see the daily now is showing CTCs in our favor. We know that very well in the 4-hour, for example, we had a great opportunity to gain entry into this particular pair because the swings had been breached. There we go, swing high, swing high, swing high. Ooh, a lot of price action happening around that support area, broke through bearishness. So now the CTC went red, and we should be looking for opportunities. Moving average all crossed over, most importantly, CTC was showing negativity, and there was a beautiful opportunity to gain access to this, which is what I did, and still in it as we speak. So, but I'm well aware that at 1400, and there it is at the bottom of the screen, is within grasp. So psychologically, I know that 1400 is likely to be a very strong support and resistance level. So my limit has been placed at that area. So if and when price action gets to it, then I'm going to be triggered out. I want to take my profits, and then what I'll do is I'll bide my time to see if we can see a break below the 1400 going on a daily or 4-hour time frame, which would give us an indication of long term as further sentiment for downside, and then I'll follow the rules accordingly for that particular setup. So as it stands now, you can see the consolidation between 1410, but primarily 1410. We might see, because we've seen 1410 as a support as well. Noticeable support there, and resistance support in the past. So we're going to see consolidation at this area here before we see any further continuation or possible price just lagging around this area, because psychologically, as we get closer to 1400, people initially shorted will start thinking, okay, well, great, now it's time for me to start taking profits, and they'll start selling their positions, and people out there will be buying them back. So we're going to see price action just consolidating around this area possibly for the remainder of this week. Bar that, unless we get some really negative figures out. We have German factory orders out this morning. So the previous figure was 1.8%. They're expecting a forecast of negative 1.4, which is quite. If it comes in even lower than that, then I think we'll see some further drives to the downside. The news out there at the moment now that's not really doing wonders for the euro is the fact that Italy and Spain have raised up again on the radar in terms of issues, debt issues in their countries. Plus, also, Chancellor Merkel had some voting recently, and she did not fare well. Her political party did not get a really good reception. I think a lot of the German community are sick and tired of her policies of trying to bail out all these weakened economies. And I don't see it getting any more. I think we're going to see yet again people having to delve into their pockets to pick up to help Italy in particular. But I think the big one that's really going to break the bone is going to be Spain. And I don't think the German people are interested in doing that now, because they're aiming to pay for most of it, because they are the strongest economy in the Eurozone itself. France is also teetering. There's lots of word out that their AAA status will be taken away from them. If that happens, well, it's like a deck of cards, because the French economy is meant to be the second largest one in the Eurozone. And if you have the second largest economy in the Eurozone losing its AAA status, it's just going to cause a huge ripple effect. It's going to be felt throughout Europe, but also globally. So things are not looking good for Europe at the moment, and I think as it stands now, looking at the chart, we should still look at as 1400 as a possible support and resistance level there, a possible breather before we see a continuation lower. Next up is sterling against US dollar. There we go. Let's have a look at the daily. You can see here again, like its European counterpart, we've seen a lot of negativity in the past week as prices moved from the highs that we saw recently back down to. So as you can see, price is trading below the 200-period moving average, the institutional moving average, which is not a clear sign of any bullishness. CTC on a daily has gone negative, has been negative for the past past week or so, and you can see the extension from its high now, the pullback, and this is likelihood of that 100% move. The initial move over here will take us to around about the 1605, but ideally you're looking at 1600 as our potential target for this pair, primarily because it's psychologically a very strong support and resistance. We've had a couple breakouts through it, but overall we've seen a lot of hesitation at that level, and it's a round number. So 1600 we're going to call a psychological support in this particular pair as it moves lower. Notice the actual trend direction is quite steep. The sell-off is quite steep. This is primarily because of all the negativity that's come out of European as well as the stateside. This doesn't bode well for sterling itself, as we've seen really negative figures coming out of its production figures, employment figures, etc. have all been quite negative. The only one that's really been doing well is the housing market for some strange reason, but that's primarily because things are at an all-time low, interest rates, etc. So that's all budding well. As it stands now, psychologically, we're going to be looking at the next potential target being 1600 overall. A break and close lower than that would definitely look at 1518, and then a likelihood of all these ones down here, 15400 being a price support and resistance. You can see these quite clearly now within the fib retracement, or sorry, projection figures. So 1600 still on the chart. Failure to find resistance or support at that level there. You can see here it's broken, it's breached the prior support and resistance level just recently, yesterday's one. You can see price action actually closed higher on the institutional moving average. However, Japanese market, Asian market trading has taken over, and we've seen price fall even lower during the course of the evening, which has taken us through this price support and resistance level here. So you can see roughly around the 1200 mark, very strong support and resistance level in the past. That's been breached. The institutional price has been breached. So you can see psychologically overall market sentiment is still looking lower. And as I mentioned, 1605 would be your first initial target, followed by 1600 psychologically wise, followed by a break below 1600. If you look at it on a weekly chart, I'll give you a clear indication. Oops, not a monthly, a weekly would be good. There we go. You can see that the institutional moving average has been acting as a resistance level on the top, and you can see that we haven't been able to trade higher than 16700, because if you look here at 2009, we were in this consolidation band. It's done it again, the institutional moving average moving over, so it's not faring too well for this pair. You can see the lower swings here, and guess what? Look what price action is doing. If you look way back in time, from here, 2007 through past 2008, resistance, bang, resistance, resistance, resistance again. So not looking all that great for this particular pair. As we move, we could ultimately look at roughly the 1500 mark here being our potential long-term outlook as price fails to break higher than 1670. So in order for this look to remain really, really bullish, we want to be trading above 1670, but the institutional moving average is up above us, and we're getting a major slowdown as we head into the right-hand corner of where we are now. And as long as if we break below 1600, then you're going to be looking at roughly those areas I mentioned below, 1570 or 80 in particular as initial target. Just below the 1554. Yeah, 400, apologies. Ultimately, back down here to this major trend. But even if it breaks that, then we're looking at way down here. So not looking all that rosy for the pair at the moment. Now, you can see the CTC is still blue, however. But if we move back down to a daily, you'll notice that we're starting to see this momentum shift. 1600 would be ultimately the goal. But a break below 1600 psychologically will see price continue to fall quite rapidly to the downside. So setups, you can see that if we put in 1605, as I mentioned, it was a potential slowdown area, and ultimately 1600. So as we head towards that consolidation, it's literally a consolidation band, because you can see that the price action, even though it's falling, it's moving slightly sideways. The actual candlestick bars themselves have been quite small, dictating that momentum is starting to shift now. Instead of the initial buying that we saw quite drastic moves to the downside, we're starting to see a lot more people starting to take profits as they head towards these bandwidths, or psychologically the 1600. So we're seeing a slowdown in price action. It'll still keep falling, don't get me wrong, but that price action fall rate will be quite slow. And you can see here, for example, on a 4-hour, 1500 was definitely a clear support or resistance. We breached through that. So the next one is likely to be 1600, but we could possibly see slowdown between them. We could see a bit of a pullback before we see a further continuation lower. CTC on that time frame is still looking negative. The same with the hourly chart. There again, you could see there was a bit of a slowdown yesterday, and price action is primarily just retested yesterday's lows, and we've seen a slight bounce consolidation this morning, first leg. So Asian market has taken it lower. However, we're seeing a bounce on the European session open, and as long as it can stay below this prior resistance support here at 1200 on this time frame, then we should be just seeing this as a consolidation and ultimately a hesitation before we see a further break lower. If it breaks above 16,1200, then we're seeing a consolidation move, and we should be looking for potential targets to the upside. Noticeably, if you're looking here, you can see there's roughly one here at the 16,2300 mark, noticeable one. And then looking at higher ones, you're looking at the institutional moving average as part of that. But overall, we're looking for consolidation to the downside for this pair for the remainder of this week. A break below 1600 would definitely see further selling, bearishness, and quite thick selling to the downside. Moving on to the US dollar, Japanese, Swiss franc, good old Swissy. We've seen some pullbacks. Well, we've seen a noticeable pullback over the major parts of August. This is primarily because the Swiss government had actually put in some plans, or put into place plans to try and to stem this downside negativity that we saw on the US dollar against its pair for obvious reasons. A strong Swiss franc surrounded by a very weak Eurozone, it just doesn't bode well for itself GDP-wise, export-import figures, etc. like that. It just wouldn't be right. So they tried to stem that negativity seen on the US dollar. That took it well above the 80, which happened to be a price support and resistance level. You can see a lot of consolidation here through the latter part of August. Saw a breach, and then that failed to materialize because it didn't go any higher than the next support and resistance level, quite a noticeable one here, at roughly the 83 mark. So we went into this consolidation area, and that failed to stack up. CTC wasn't finished. Then on daily, you could see we had the first two parts of the four-part template, and we didn't get our CTC on our side going blue because we didn't see price overall really trading well above the extension, and we saw price reverting to the downside. We saw a possible breakout, pullback, consolidation and continuation. That failed to materialize because it broke right through again, and we saw further selling on the US dollar against the yen, against the Swiss franc, sorry. As it stands now, especially with all the, we saw, for example, on Friday, really bad news with employment figures not showing a single job being made available for the first time in as far as I can remember, which doesn't bode well for any for a market that's meant to be finding any bullishness. No jobs available, which means nobody's going to be employed, which means there's more unemployment, which just doesn't really help the economy at all. So yeah, those figures really not helping the US dollar at all. So further indication that people are going to be starting to look for places of safety, safe haven currency pairs, commodities, etc. like that, to rather invest in. And that's what we saw. That's what we're going to see. You're going to see that gold is now trading. It's broken above the 1900 mark. As long as it can find support above that area, then we're still looking for higher. It's now trading in a consolidation range roughly around the 19200 area. And I think we see a breach above 1922 for this week. We're going to see further continuations higher. But yeah, commodities, safe haven commodities, etc. like that, all pairs, Canadian, Australian, those are all going to be doing really, really well out of this. So that's what's happening at the moment now. Back into this, we are consolidating roughly around the 78.50. A breach of 78.50 would definitely see further downside movement. We could look at 76, for example, as a potential stop. We've seen some hesitation on that area, but ultimately way down here at the 72, the lowest US dollar has been against Swiss franc will be an ultimate target. So if we look at our intraday, let's have a look here. You can see 4-hour, hourly, all sitting in this consolidation band with, you can see a price action at 78.50. We've seen a lot of support at this area. We've seen price trade below it, failed to materialize and pulled back, but it's still hanging. It's hardest to try and hang on to that area. I feel if we break below that, you can see there's quite a lot of openness between where it's now currently trading and the all-time low that we've seen. So if we get a bearish breakout, then we should be looking at 7600 and 7200 as potential targets long-term for this pair. It's trading below, or just on the underside of all the moving averages. CTC is well extended, so look for a break and close lower than 78 to be on the fair side. and if we do get that, then we should be looking for ultimately lower swings for this pair. Last pair of the day is US dollar against Japanese yen. Let's look at the daily time frame for it, and you can see the areas where we have been, where we've come from, and where price is likely to go to. You can see here recently we spent most of the time consolidating between the 80 and this downtrend. Notice we had a breach of the 80. Price has been trading lower. CTC is well extended to the downside. 1 or 2 days with CT matching up blue, but overall the trend direction is negative, and you can see here at 76.50, the all-time low. Price has been consolidating for the major part of August, not looking all that good, and we're finding lower swings going into this. So price action not looking hell of all that great for the US dollar Japanese yen. However, long term US dollar index has been strengthening week on week, so heads up. The longer it consolidates, then there's more likelihood of a potential bounce. We saw a lot of consolidation and we had bounce along the way, so just keep it in mind. We're still trading negative, however, on a daily, so if we get a definite breach, a bearish break, I did a nice bearish engulfing counter to the low side, then we'll definitely see further selling. However, if we see a bullish engulfing, then we can definitely look at a potential bounce higher. Overall, our target would be roughly on the 80 mark in this case, because it has been a price support and resistance level, significant psychological barrier, that one in the past. So bouncing along 750, want to see a break either side. Ideally want to see a break above 77, because it's been consolidating between those two areas. I'll show you the 4-hour chart and it'll give you a clear indication of that. There we go. So you can see 76.50 and the 7700 mark. If I go back, you'll notice that there has been a lot of consolidation in that area. Look at that. Bar the breakout here, but overall, psychologically, it's still a lot of negativity in this pair. As it stands, a lot of negative news coming out of Eurozone, stateside, and Swiss government has been trying to stem this. The Japanese government has been trying to stem this downside negativity, because it's just not good for business, primarily because the US dollar is their largest importer or exporter of goods. But it's not looking good for the company, but it's just a safe haven. Japanese yen, we know, is a safe haven currency when the US dollar, etc., are having a turmoil. It's the same with the Swiss franc. Commodity pairs as well also factor in. So people buy into the Japanese yen long term as for stability reasons, and that's what we're seeing now. But it's been very consolidative over the past month, and within this consolidation trade, you can trade it, don't get me wrong, but there's a lot of wickedness, a lot of volatility in this pair, and you don't want to be trading. You want to be trading clean air. That's the way I trade. That's the way I prefer to trade. So if I can trade clean air, then great. If I don't get to trade clean air, then so be it. But I'd rather be patient, buy my time away for the perfect setup to come, because then I'll be trading momentum, and that's what I want to be trading. I want to get quick moves, quick instinctive moves to either side. Either way, I want to be trading with the money. I don't want to be trading against it. So in this case, this is a no trading zone, is what I call it, and I want to see a definite break lower than 76.50 with a lot of bearish intent. Not one of these tiny little candles. I want to see a nice bearish engulfing downside. I don't mind giving a hell of a back to the market, because overall the trend will just keep moving in that direction. It's the same to the upside. Institutionally, you can see price action revert, slow down. Not as strong as we've seen recently, but as long as it continues to go sideways, then there's a good potential for price action to start looking for potential bounces to the upside. And you can see the institution moving up, starting to slow down. Now you see that gradual, the gradient starting to slightly grade away. Before it was quite strong, it's starting to grade. And as long as we do that, but we need something to punch above 77 and close above the institution. If we do get that, then ultimately the US dollar is starting to look a bit more bullish against the yen pair. But until such time as this doing it, we're still consolidating and still indecisive. So break below 76.50 would definitely signal bearishness for this out long term. We know that the US dollar Japanese yen has been in a negative trend for years. So we just want a confirmation signal either way, and then we'll trade it. That's all we're looking for as traders, and that's what the CTC does. We want to see a definite confirmation upside move, bullish engulfing, break above 77, which definitely would give us that indication for the upside movement. Otherwise, looking for the downside breakout to the low of 76.50 would definitely signal further downside movement for this pair. That's it, guys. Hope you had a fantastic week or day trading today. My analysis has been going on for 25 minutes, so I'm going to cut it short now. I'm going to bore you guys to death. So, yeah, stick to the rules of CTC or any particular template that you're trading. Please manage it with strict money management rules. It's no point trading with a really great strategy template if you don't back it up with sound money management rules, because it means nothing. So keep that in mind and trade serenely.